So I think we can go ahead and kick off. It looks like we've got a couple still trickling in, but we want to be respectful of you all's time, so we'll go ahead and get started. We certainly appreciate you spending an hour with us this afternoon to talk a little bit about some options that we have in and around ERPs, as well as some reporting solutions to help you prevent as well as detect fraud. So a little bit about the people you heard talking today. We have a couple of other panelists, but predominantly you're going to be hearing today from me. I'm Amber. So I am the Vice President over the NAV Business Central practice here at Rand Group. So I spent more than 15 years in industry. I am a certified public accountant, so certainly most of my time was within the accounting realm, but I also did spend time in operations as well as IT when I was on the industry side. Also on the call, and you'll be hearing from him in the back half of the presentation, is Brian Peterson. He's our vice president over our data sciences practice. So he has more than 14 years experience in data and analytics, and he's worked from product management all the way to service delivery, as well as on customer accounts. So again, you'll see him in the back half of our presentation, and he'll have some good stuff to show you in terms of what you can do through a solution like Power BI in terms of helping you visualize where you may be having control issues. For our agenda today, we'll start with a little bit of background and a little bit of information on Rand Group and the teams that you'll see who work here. We'll talk high level about some statistics in and around fraud, different types of controls, as well as how we have or what options we have to deal with different types of threats. And then finally, we'll end with Brian, and he'll show you some Power BI, some dashboarding in and around optics for detective controls. And if we have time at the end, we'll take a few questions. A few housekeeping items before we officially kick off. You are in listen-only mode. In the event that you do have a question, you can submit that in the question box on the GoToWebinar panel. And we'll get to those, as I said earlier, at the end of the presentation if we have time. If not, we do get a list of questions after the webinar is over, so we can follow up with you directly. And we are recording this webinar, and we'll make this available to you for future download in the event that you need it or you need to reference it at a later time. Okay, so a little bit of background about Rand Group. We were officially founded in 2003. Our beginnings are much earlier than that. We spun out of a CPA firm, but officially became the Rand Group in 2003. Across our team, we have multiple people coming out of different disciplines in business. So we have accountants, certainly we have supply chain, we have the real technical people, the people that work on infrastructure, we have coders, computer science people as well. So a lot of different disciplines included on our team. We work across multiple platforms, not just ERPs and not just reporting, but also different solutions as well. And even within ERP and reporting, we work with different ERPs. So my team is NAV Business Central, but we also work with NetSuite. We also work with an SAP product. We also work with GP, and we work with the larger ERP from Microsoft, which used to be called AX, or Finance and Operation. It's gone through a couple of renames at this point, but multiple platforms, different types of systems, and even different branding within those platforms or within the software types. So a fairly broad base here at Rand Group. And just to brag a little bit, we do work with more than 500 clients. We've logged over 2,500 successful engagements, and we have a 90+% client retention rate, with almost 60% of those clients coming to us from different partners. So our mission here at Rand Group is to help you, clients, people use technology for success in your business. And the teams that we have here to help us do that, just to give you a quick bit of information on each one, starting on the left, analytics and dashboards, or what you just heard me refer to as data sciences. That's Brian's team. So they work with multiple softwares, including Power BI, which we'll see today, and Jet Analytics, BI 360, as well as a few others. Their predominant goal is to turn your business data into usable information. So that's really what that team does. The next one down, our application development team, or app dev as we call them. So what these folks do is If you have a particular niche need, depending on what industry you're in, and there's not a really good standalone third-party solution that's already built and established out there, these folks can custom build applications to do different things. They can build them from the ground up, or they can even use existing technology like something like Microsoft Power Apps to build applications for use in your operations. And then once we get those applications built, we work with our integration services or automations team. And these folks are able, they connect systems together, right? Whether it's third-party established software or even custom built applications, whether we built it, and we've even worked on applications where our clients built it. So the integration team is able to connect those to each other, and in particular to the ERP systems and reporting systems. On the right-hand side, we've got our transactional team. So this is a fairly big group. My team is part of this group. So we work on the ERP systems. Again, there are multiple ERPs. We work with CRM, field service, a lot of different applications. So what this team of people does is, if you're changing systems or looking at new systems, we work on the design and implementation of those new systems. And we also provide long-term user support once we get you up and running. So that's what the transactional teams are really about. Below that is our cloud and infrastructure team. They're exactly what they sound like. They work on infrastructure, and in particular in cloud hosting. We're actually going to talk about cloud hosting later in the presentation, but there is a team of people who work with something like Microsoft Azure, where you can store your applications, your on-premise deployments up in the cloud. And then last but not least, our marketing team. These folks can work with you on marketing strategies, digital campaigns, as well as websites. So in the event you need something on that side of the house, that's the team that you would go to work with you there. All right, so that's Rand Group history and Rand Group's team and what our mission is. Let's talk about fraud. So I use, or am referring to in this particular slide, a report that was put out by PwC. It's their Global Economic Crime and Fraud Survey, and that was in 2020. So what this survey does is it had more than 5,000 respondents, or 5,000 different businesses, and these are some of the statistics that came out of that survey. So interestingly, almost half of all respondents have experienced some type of fraud within the last 24 months. And in fact, they've experienced on average 6 instances of fraud. And in terms of what that fraud cost these 5,000 respondents, it's estimated around $42 billion. So, and that's the important thing about that number, is that does not include the softer or more difficult to estimate aspect of fraud, which might be something like brand damage or loss of market share, or some of the real consequences, but it's very difficult to actually assign a quantitative value to those. So that's more just their estimated firm losses associated with fraud. In terms of who's perpetrating it, 39% of the fraud reported in this survey actually came out from outside the organization itself, and 37% from the inside of the organization. So that external perpetration of fraud has actually been climbing and statistically gaining ground in terms of how much fraud comes from outside. That number has been getting bigger over the last several years as everything's networked, and we'll talk about external fraud and some options that we have there. But interesting that it has, over the last several years, really started to become a bigger and bigger proportion of the type of fraud you see, whereas historically, several years ago, the biggest threat actually came from inside the organization. So 37% of fraud reported came from inside. Now, if you notice, those two numbers do not add to 100%. You are correct. The rest of that fraud is either coming from collusion between internal and external, or the respondents don't actually know who perpetrated the fraud yet. So the two biggest drivers, again, that we're going to talk about today, external versus internal, because in the event that they're colluding together, then you got to insulate yourself against both. So controls, let's talk a little bit, or kind of walk you through a little bit. You're going to recognize these terms if you come from an accounting background. When we work with clients in terms of how to control or inject controls into their environments, we use the same traditional control buckets that everybody's familiar with. In terms of preventative controls, We'll talk about cloud-based hosting in a second. We look at segregation of duties, certainly. We look at things like document approvals. In terms of detective controls, your traditional cycle counts, your reconciliations. Brian's going to give you some insight on visual indicators and how Power BI can be used to supplement your control environment as well. And I just didn't want to leave it out on the third one where we're not really going to talk about corrective controls or corrective control options today, because those are generally designed to be pretty temporary. They're very robust, very laborious, and they're typically only deployed in the event that an organization finds a problem, but they can't tell where it's coming from. So you go into a temporary corrective control environment to root out exactly what the problem is. Certainly, if you are encountering an issue and you need help or options in terms of what type of corrective controls, absolutely you can reach out. I'm just not going to cover anything in today's call. Okay, so external threats to the organization. Now, this definitely isn't an all-inclusive list, to be clear, but now the largest perpetrator of external fraud, because remember, customers can commit fraud and vendors can commit fraud, but the largest external perpetrator is hackers. They represented 34% of the fraud reported that came from outside of the organization. Now, most of us are very, very familiar with a lot of things that they do. We'll run through a couple of them, but generally these folks are after data. Depending on what industry you're in, what kind of data you store, they could be targeting different data. We're all familiar with breaches of credit card data and the more traditional stuff that they can go after. They can also go after lists of customers, vendors, whatever they can sell. So they can be after data. I'm certain everybody's heard of ransomware as well. This one has gotten increasingly more of a problem over the last several years. In fact, we're actively working with clients right now that are still have their data and information stored on servers somewhere else. So pretty common, and effectively what they do is they breach your network. They take possession of your data, of your files, of something, and they encrypt it, and they won't let you in until you pay a ransom, typically in a cryptocurrency. So we kind of all generally know what they do, and certainly hackers aren't the only thing, but the thing I wanted to focus on in terms of this presentation. So what kind of options might you have? So looking through the list, I see people that are on cloud-based ERPs. I see people that are on-premise deployments of ERPs. I see all different systems in there. But in terms of options, the first, if you are in an on-premise deployment, maybe you're using something like Nav and you're not ready to change ERPs yet, or GP, or whatever the case may be, you still are able to move to a cloud-based hosting. Something like a Microsoft Azure, where you move your databases, you can move them and you can put them out on Microsoft's data farms, their server farms, and you pay a subscription. So it's a subscription-based service that you pay for the capacity that you need. You can scale that up or down. And included in your subscription is you're getting behind the scenes actual Microsoft engineers that their job is to protect and insulate that data and all the other data they have stored out there from external attacks. So that's still a really good option, even if you aren't ready to go all the way to the second option, and this is related to ERP specifically. But if you're nearing the end of life on your existing ERP, I think a good place to start looking is one of the cloud-based. So my team works with Business Central. NetSuite is a cloud-based ERP. The SAP product that we work with is a cloud-based ERP. So there are a lot of options here at Rand Group in terms of which ERP and which might best fit from a functionality perspective. But a cloud-based ERP is a good bet in that it's subscription-based as well, so that you can scale the users that you have up or down depending on what kind of business cycle you're going through. But your data is all stored on, in Business Central's case, and it would be different for every software, but it's stored on Microsoft servers. So not only do you get the security from the engineers that watch over those servers, but in addition, in a cloud-based ERP system, you also get some automatic releases, so, or enhancements or code updates or whatever the case may be. So for any of you on the call who are are working in an on-premise solution and you're working through the 1099 change and for 2020 and maybe taking some code updates in a cloud-based deployment of an ERP, those updates can be pushed in a much more automated fashion. So just to sort of recap here, if you're nearing end of life on your servers, or you feel like your servers are vulnerable, or you're ready to even change ERPs at this point for enhanced functionality, or you're at end of life of the ERP you're on, or whatever the case may be, you have a couple of different options to take advantage of the cloud, not just for the advantages of subscriptions and the ability to scale up and down, but you get that security as well. And you get a team of engineers who do not work for you and aren't on your payroll actually taking care of your servers and your data. For internal threats, and the accountant that I am is getting much more comfortable with this slide. These are going to be things that we know, things that we've heard of, but for threats coming from inside the organization, and we definitely don't have a long enough webinar to go through every potential option, but generally we should understand that asset misappropriation, which is basically theft from inside the organization, is the third largest type of fraud overall that businesses reported. And there are going to be some very recognizable trends here. Product theft, in particular, if you're dealing with inventory or product that is viable or has value on a secondary market, you may be pretty susceptible to product theft. Procurement fraud, procurement's a huge area. You give a lot of authority and a lot of processing capabilities to people in the procurement area. Cash and payments, very traditional. You know, while there's been a lot of progression over the last several years in terms of electronic payments and some of the controls that you can implement, definitely still an area that we want to make sure we keep an eye on it. So in terms of some things to think about for controls, depending on whether or not you have these flipped on or off, this is just a brief list given we're just on a short webinar today, but certainly we start or want to look at system permissions segregation as much as possible. I'll tell you, we also do take a practical and pragmatic approach to that and understand that if you go all the way to accounting textbook segregation, that may not be the most practical solution, but it's certainly our first line of defense. And then where we can't fully segregate, we start to look into supplemental or mitigating controls, some of which include master record approvals, perhaps, or generally actually vendors and customer records in terms of master records are the most frequent types of records to be used, whether it's a fraudulent vendor or a fraudulent customer or whatever the case may be. So even if you have to let somebody else set them up, you can still turn on something like approvals to make sure that you or whoever has authority knows what vendors and customers are coming into the system. You can look at document approvals for purchase documents, and this is, I'm getting into Business Central specific terminology, and it's probably different across all the ERPs, but a purchase document in my world would be a purchase order. So maybe you want to turn on purchase order approvals to make sure that you know what purchases are being authorized within your organization. And then the last on this presentation, there are all the ERPs have capabilities in and around positive pay, electronic payments. So positive pay, while it doesn't necessarily prevent anything inside the ERP, it does give the bank the capability to make sure nobody's cashing fraudulent checks against your account. And those positive pay files can be natively configured within most ERPs. You can turn that on and set the process up to submit that to your bank and help insulate you from some fraud in terms of checks coming against your accounts. On the detective control side of the house, a couple of things within the system, cycle counts. Again, your ERP system is going to have functionality to do that. You generally have flexibility to figure out which accounts or which items, inventory items, and how frequently you want to count those. So if you have anything in stock that you're trying to control that may be particularly desirable or particularly vulnerable to theft, you can configure your cycle counts to some degree to make sure that those are the things that get counted more frequently so that you don't have large gaps of time between fraud being perpetrated and fraud being detected. Definitely take advantage of bank reconciliations, generally account reconciliations, and any kind of recon tool. I know I've worked with people historically that, particularly around cash, the bank reconciliation is generally where you can find an issue. Maybe it's a deposit that doesn't clear, or something like that. So you definitely, any of the tools available around reconciliations are good ones to use as well. In terms of reporting, really, Brian's going to carry the torch on this. In terms of the types of things that you could report on, you can definitely get this stuff. The data's in the ERP. The question is, can you do a better visual format using another tool? And I think the answer to that's yes. But things that you can report on for customers, customer fraud is generally largely led by return fraud, or perhaps you need to look at sales orders for $0, your sales orders for negative gross profits. Maybe you need to look at vendor spending. You have a lot of different options. Inventory adjustment reporting to see if it's a particular item that always goes missing, a particular category, whatever the case it is, may be. The data's all there. And I think at this point, I will turn this over to Brian so that he can show us what he can do with all that data.
Perfect. Thanks, Amber. I really appreciate it. If you wouldn't mind making me the presenter, I can go ahead and show my screen and pull up a Power BI report that I put together. So while we're doing that, hi everybody. My name is Brian Peterson. I know that Amber introduced me in the very beginning, and I'll go ahead and show my screen here if you can let me know when you can see that, Amber. My name is Brian Peterson. I'm a vice president over the data sciences team here at Rand Group. Prior to joining Rand, I worked for a company called Jet Global. While I was there, I spent about 15 years in the data and the analytics space. So all forms of reporting and data warehousing, dashboards, you name it. And not only doing that on my own, but also leading teams and developing products that would assist organizations in their quest for making better sense of their data. So I think that Amber did a fantastic job of going through and talking, at a high level for the purpose of the webinar, of some of the key topics with regard to fraud. As she mentioned right there towards the end, one of the things that we've found with a lot of clients that we work with is that they're going through the processes. They have controls in place with regard to populating or inputting some of the raw data into their ERP system. Do things like cycle counts, of course, all of the sales order processing and things like that. But a lot of clients that we work with or talk to, they struggle a bit with regard to how do I make sense of this data, right? So all of this information is getting plugged into the various business systems, but unfortunately, a lot of the organizations that we speak with or that come to us, the extent of what they're doing as far as analyzing this data is clicking the little export to Excel button, right? I was speaking with a Microsoft program manager a few years ago, and that was one of the things they mentioned is, it's not a true business application unless there's an export to Excel button, right? But once they export everything to Excel, then they're just looking at the raw data, right? And I was working with a client probably 18 months ago where they were trying to get to the bottom of some discrepancies they were noticing. And I mean, they basically had an Excel file with like somewhere it was close to 1 million records of data, and they were just really struggling to make any sense of it, right? And so what I want to talk about here for the duration of my time on this particular webinar is leveraging a tool such as Power BI, right? There are a lot of tools out there that really help to not only make sense of the data, but to lay the data out and help to analyze the data in a more user-friendly and consumable format. And so I wanted to take some of the examples that Amber had already mentioned and just talk about those in terms of what we are seeing here in Power BI. typically, most folks I've talked to have heard of Power BI in some way, shape, or form. If there's anybody on the call that's not familiar with it, it's a data visualization tool that's put out by Microsoft. It connects to loads of different data sources, and really, makes it easy to look at data from your business applications and then visualize it. So as far as the three main examples that I want to go through in terms of what we're looking at here today, right? The first one is online fraud, right? There are some various data sets that you can find online that are available, publicly available. Of course, they're all anonymized, that cover fraud. And so that's what we're looking at here, because one of the things in terms of external fraud that is very important, particularly to people in some specific industries like retail, for example, right? Where they can go and there are all of these transactions, and a lot of times the transaction volume is such that you don't really have the ability to easily have an individual or even a team plow through all of these transactions and try to spot fraud, right? The volume has just outgrown that ability. And so one of the things that we'll see on this particular dashboard is, right, the number of different accounts that we're looking at that had, predicted fraud or actual fraud, whatever it may be, being able to look at the average transaction amount, right, for things that were fraudulent versus non-fraudulent. So there's an indicator there that some of the fraudulent transactions actually happen to be, on average, a bit smaller, right? Oftentimes people will not try to go and just, buy $37,000 worth of computers online. A lot of times it's smaller purchases that will oftentimes fly under the radar. But we have the ability to go through and easily have visual indicators that can be used by the appropriate individuals within the organization to look at and monitor these things as they're happening. And also to be able to dig in, as we see here, to all of the transactions and then take a look at what it may be. So we have, we have an account, whether it's actual fraud or non-fraudulent, how long the account's been a customer of ours, for example, if it was a card that was used, the type, and then the transaction amount, of course. One of the things that can be very useful as well, right, especially with the global economy that we're all in now, is seeing where some of this fraud is actually happening. And one of the things I want to mention, so one of the benefits of leveraging a tool like Power BI that will show this information to us is I can then come in and say, well, I want to see, right, Peru. I want to see the fraud that's happened in Peru, and I can see where these numbers are appearing. So, and how some of those numbers relate to some of the other averages that we saw before. In addition to that, I can come over here and see this is the subset of transactions that applied. So, most of the transactions were in the $117 range. We had one transaction that was, $1,200, et cetera. So, this makes it easy to go about and start to look at the data and analyze the data, but do so in a more visual manner than just looking at it in Excel. Could we group things up in Excel? Could we, group everything up by country? Of course we could. But oftentimes what we're going to look at is something that's more akin to the transactional piece that we see up here. We do see that there is one, there is actually one large bubble here that stands out, much larger bubble than the rest here in Kenya. And when I look at this, one of the things that I'll notice is I can see there's really only a handful of transactions, but there is one transaction that stands out for $128,000, right? And so this allows me to come in and take a closer look at at where things are happening. I can see trends. I have things that stand out, right? Right off the bat, as far as this is concerned, and from a business user perspective, makes it much easier to start to analyze this information, right? Picture is worth 1,000 words, type of thing. Two more quick things that I want to highlight before I move on and talk about some ways that visual indicators and dashboards can help manage or detect internal fraud, right? But two more things, right? Here we have the hour that the transactions are taking place, right? So I can look to see if there's any typical spikes in terms of, people are, fraudulent activity is happening at, 3 o'clock in the morning a lot more frequently than 3 o'clock in the afternoon or whatever it may be. And also, one of the things I want to talk about is over here, we have the ability to see things like, what was actually fraudulent versus what we predicted was going to be fraudulent, and see how those two things are being compared, right? One important topic that I want to reference, and it doesn't apply just to fraud, but it's a very relevant topic, is machine learning, right? We see more and more clients that are using machine learning to proactively detect trends or anomalies for things such as fraud. It's what machine learning is, right? For those of you that may have heard about it but aren't, deeply familiar with it, it's really the practice of using data science and statistics and things like that to look at past behaviors, right? So there's basically a model that gets built, look at past behaviors, and then based on that, determine what might happen based on transactions that are happening now or what may happen in the future, right? So we can have machines analyze billions of transactions. We can let it know, out of these billions of transactions, these are the ones that were fraudulent, and it will start to put together patterns that it can then use to apply to future transactions, right? So, transactions more than $5,000 coming from a certain area of Boston at 3 o'clock in the morning on Tuesday, right, have a much higher percentage of being fraudulent than some other comparison. And so when transactions like that start to come in the future, right, then those are things that can be flagged and earmarked very quickly and very easily with no human intervention, right? I'm sure that many of us have had the experience where all of a sudden you're at home, and then you go on vacation all of a sudden. And you go on vacation, and I live in Portland, Oregon, and let's say that I go on vacation to Southern California or Kansas. And I pull up at a gas station and I fill up the rental car, and all of a sudden, 60 seconds later, I have a text message on my phone from American Express saying, "We've detected suspicious activity. Are you really in San Diego? Is that you? Please call us or reply back to this text." Those are examples of how large organizations are using things like machine learning to detect patterns. Brian isn't usually in Southern California or Kansas City buying gas, to almost immediately take those transactions that are coming through and proactively reach out to the cardholder to ensure that it's actually them, right? And so that's one of the things that I want to mention. I'll talk a little bit more about machine learning here in a while, but on my data scientist team, we do have people where that's what they do. That is their background. They have master's degrees in data science, and they're accustomed to building out machine learning models to take whatever data set it may be, right? We're using this in the context of fraud, but it can be inventory management, inventory controls as well, right? So when do we need to reorder inventory from a certain vendor to maximize our warehouse space, for example, things like that, based on trends and customer buying patterns, et cetera. All of those types of things are common scenarios that we see in the machine learning space. And at Rain Group, we have the folks on staff that can assist with that as well. And I'll talk about that more in just a little bit. I want to be sure I have time to go through the other ones, right? So one of the things that Amber mentioned was with regard to cycle counts. So, going through counting inventory at whatever, whatever cadence makes sense to the organization. And what we're looking at here is kind of a high level or overview of inventory count deviations, right, or variances. So, in this case, we're just talking about TVs. We go through, we do the inventory counts. We're expecting to have this many TVs in the warehouse. We actually, we expected to have 100. We actually have, 87. So we're short 13. And so a lot of times when we talk with clients, right, they're just the normal course of business. You know, some things are going to get misplaced or whatever it may be. That's normal. But being able to identify trends or large variances, especially over time, is something that can be really useful. So here I can see just, you know, overall for the top, you know, all the top items that we're looking at here, right? What are the variances by month, right? So I can see if there are any trends or patterns, right? Are there any spikes consistently in December? It's easy for us to look at this over years as well. So if I look at all the Decembers from 2015 through 2020, right, do we see patterns across years as far as when, you know, when some of the, you know, the perceived theft or things like that may be happening? Variances by item, right? So, so we can look at things by dollars, we can look at things by quantities. It's really easy for us to look at that and change the look and feel as far as some of this information is concerned as well. And then we can have indicators that really help to stack things up, right? So I can see that, you know, as far as our inventory variances, or 30% of these variances are all accounted for by this one item. If I want to look at that in more detail, I then have the ability to click on that, right? And then I can see, based on this one item, that the context of the rest of what I'm looking at then changes. So I can see for this one item, right, this is the trend as far as what makes up these variances, and then this number down below, maybe I can just you know, sort this by variance by clicking that column, and then I can see this number down below, right, where are the spikes? So I mean, just looking at October, we had, you know, we had an inventory variance of 30, right? So between October and November, there was a huge spike right there. I mean, those two things compared to the total make up a third of the total variance for the entire year. So maybe that's something that, you know, that suggests that we should look into, you know, some inventory controls, or take a closer look at what might be happening, right? And sometimes these things might be easily explained, right? Oh, yep, nope, some of this inventory was transferred to a different warehouse. It was cataloged incorrectly in, you know, in the ERP system, and so that's, you know, that's what ended up happening. Or there could be something else going on where we really want to dig in and take a closer look at what may be happening with some of the inventory issues that we're seeing. So one of the other things that I do want to talk about as well is with sales orders discrepancies. As Amber mentioned, right, there are, you know, unfortunately, oftentimes people that might think that they're smarter than the system, or they've worked somewhere long enough that they can kind of skirt some of the controls, or, hey, you know, if I just enter this sales order for this kind of fake customer who's one of my friends and just plug it in as a 100% discount, no one's going to notice that. You know, TVs or whatever it may be gets shipped to someone, and then you know, that ends up being a loss for the organization. So one of the things that we're looking at here, right, a few of the common ways that some of the actual sales data can frequently be manipulated are, you know, either looking at, you know, negative profit sales orders by month, right? So if we know that, well, typically our profit margins are, you know, 15 to 25%, all of a sudden, if we're seeing transactions that are much lower than that, right, we're losing money on these things. Those can be indicators that we need to take a closer look. We can also take a look at in the graph below, right, by month, for example, any $0 amounts sales orders, and when some of these things may have happened. So this is where tools like Power BI can be really useful, is by taking, you know, large amounts of raw data that may live in the ERP system, and then be able to classify that information, right, based on certain criteria. So we can go in and say, okay, well, you know, we have, for this particular sales order, we have what we sold it for, we have what the cost amount was for that particular sales order out of the ERP system. If the profit amount doesn't exist natively, then, you know, in Power BI, we can do a little, you know, sales minus cost to get the profit. And then if it is profit, we can flag some of these if the profit amount is less than 0, we can flag some of these transactions relatively easily, so that it's very simple for the business users to go in and add filters and start to look at the information that they want. One of the things that we'll see here, we then have ways to break down, well, who are the employees that are entering these sales orders, right? So we have two different employees that that have negative profit sales orders. We have three different employees that are having sales orders with $0 amounts. And if we want to take a look at this too, right, again, like I mentioned, it's easy for us to come in and analyze this information and see, for example, right, in June, if I want to look at this for June, I can see that, well, out of everything that we saw, Jay Allen is the person that was putting these in. And over on the right-hand side, I can see which sales orders are the culprits, right? Who it was, what the amount was, what the profit amount was, and so on. So, I mean, if we're accustomed to having, a 20% profit margin on these items, in general, so I'm expecting $1,400 in profit for this sales order, and it's minus $500. What's going on, right? I can then take a closer look at the sales order, and maybe everything's fine. Maybe there's a note on the sales order saying that we gave this particular customer a deep discount because of a customer service issue that we were looking to resolve, or whatever it may be. But it allows us to spotlight and highlight some of these issues much more easily, right? There was one client I was working with a few years back, a retailer, and they had a huge transaction volume, right? They were in the retail space. They had something like, I want to say 600,000 financial transactions a month. They were on Dynamics NAV, and they had 600,000 GL transactions a month. A lot of these related to retail transactions in their various stores. They had a few hundred stores. And simply looking through their transactions was too laborious for them, right? And so they wanted to leverage a tool like this to distill the 300 million transactions that they had into something that made a lot more sense. And that's a project that we helped them on, so that their business users could just get quick at a glance information as far as, are there discrepancies, are there certain things that are being rung up within the stores, are there an overuse by a certain person of voided transactions, right, within a certain store. So they could make better better decisions as far as some of their inventory controls were concerned. But one of the things that we'll see here is, I can tell just from looking at this, right? If I'm in Excel and I've exported everything, and this is what I'm looking at, right? If all I'm looking at is what we see here in this section, as I scroll down, one of the downsides of the human mind, right, is it's not easy for us to predict or make trends to ourselves just from looking at raw data like we see over here. Right, I can scroll down and I can see, well, there's a lot of transactions here. Maybe I can pick something out. But it's when we start to visualize all of that information, like we see here, the things start to make a lot more sense, and I start to spot some more trends as far as, well, if this person is has 82% of all of the negative profit sales orders within a certain period, and that same person also has 62% of all of the zero amount sales orders within a certain period. It could be coincidence, right? Or it could be something where we need to take a closer look at these transactions to try to figure out if there's something malicious that's going on from an internal fraud perspective that we'll want to look at, and then put in either tighter controls or start proactively making sure that some of these things aren't happening. And so as far as this is concerned, I've talked about a few different things, right? We talked about online fraud and using machine learning to navigate and sift through huge amounts of volume, some of that internal or external facing, I should say. We talked about cycle counts and leveraging things like inventory counts that are then getting entered into the ERP system to be able to make informed decisions as to, is there a trend? Is there anything here that we should pay more attention to, or are we just a little bit too lax in our overall inventory controls or our data entry, and we don't have an issue with fraud, but we really need to clean the data up, right? And lastly, being able to look at things like sales order discrepancies over time, and whether it's hundreds of transactions or millions of transactions that we have going in and out of the system, getting this information in people's hands and accessible when they need it, so that the organization and the finance team can be proactive in terms of analyzing what's happening internally or externally with regard to the financial situation and inventory, and being able to act on that appropriately. So in finishing for my part, if any of this is interesting to you, and then we'll open it up for questions here in just a few minutes. If any of this is interesting to you, with regard to to data visualization or the Power BI piece, whether it relates to fraud or any other aspect of your organization, as I've mentioned, my team, the data sciences team here at Rain Group, we cover and address all things data, be it reporting, dashboards, analytics, Power BI. There are a lot of different tools that we work with as well, just depending on the needs of our clients, right? We realize that from a reporting perspective that there isn't a one-size-fits-all approach. So we work with a lot of different tools and applications, such as Power BI, such as Jet Global, such as Solver, such as Adaptive Insights, to be able to determine what it is that our clients are looking for, and then help them engage with a solution that makes the most sense for them and that meets their specific needs. And then, in addition, as I'd mentioned, we have data scientists on staff as well that work with their clients on initiatives or projects such as machine learning projects, and engaging with tools like Microsoft's Azure machine learning platform, et cetera, to help proactively make better sense of their data and be able to go move forward and make informed business decisions. So, Amber, did you have anything that you wanted to chime in on as well with regard to more of the ERP side?
Yeah, I would tell everybody, as you're thinking through your business and your particular vulnerabilities, reach out. We can put you in touch with the infrastructure team, the respective ERP team, whatever the case may be, even if it's not covered in the presentation itself, because obviously we can't cover everything. If you do have a particular vulnerability, absolutely reach out and we will put you in touch with the right person to help in the event that isn't us. So that isn't us being me and Brian, I should say. That may be a different team here at Rain Group. So yeah. So do we want to take a few questions, or were you?
Yeah, no, that was most of what I had to cover as far as the data was concerned. I wanted to be sure to leave a few minutes here at the end for any questions that come in, and we usually get a few. And as you mentioned, if there are any questions we don't get to today, then we can be sure to follow up with people individually afterwards as well.
Right. So there is, for Azure, the way that works is we put you in touch with the infrastructure team, and they have a survey or a list of questions that they ask. They look at things like size, processing requirements, et cetera, and then they can work on estimates in terms of cloud-based hosting. So that is how we kick off that process to transition to cloud-based hosting, even if you're not ready yet to move away from an on-premise ERP or reporting software or whatever. So that's how that process would work.
Sounds good. And I see there is one comment from the audience that said that they've worked with Power BI a little bit in the past. It wasn't related to fraud, but just Power BI in general. And one of the issues that they had was around within their their company, it looks like they have a couple, they have Business Central and a few other systems, and pulling everything in, and they struggle with Power BI a little bit. The question was really around, is there an easier way? As far as that's concerned, right? That's something where I can reach out to you directly after the webinar today to talk about that a little bit in more detail. But for the broader audience, right? Power BI, just like a lot of reporting tools, if you're pulling in data from a lot of different places, that can get sometimes tricky in the reporting tool itself, right? You're trying to pull, I'll just make an example, you're trying to pull in some information from Business Central, plus you have an inventory management system that's external, and you have a fixed asset management system that maybe is completely separate, or some of that data feeds into BC or Business Central, for example. And how do I consolidate information from all these different places into one report? Oftentimes, right, the industry standard for something like that is to leverage something more like a data warehouse. We have tools that work with data warehousing as well. And really, a data warehouse is just a fancy word for a reporting database. So we can easily pull that information from all your different systems and build in a lot of the business logic, so it's all handled, programmatically. And then your business users have one place to pull all their information from. And so they don't have to deal with, how do I join my, my ERP system to this other system, to this other system. A lot of times business users aren't well versed in, joining tables and all that stuff. So that's where, some of the tools that we work with, for example, like Solver and Jet Global, both have data warehouse applications. And so there are tools out there that can make that process much easier, from which you can then overlay information from, Power BI, for example, onto that data warehouse, and then all of a sudden, to the business user, it doesn't matter where the information comes from. I was on a call with a client earlier today. They have 9 nav databases, right? 9 separate nav databases, just because that's how their business is structured. And so, consolidating data and running reports across all of these different databases is troublesome. It takes a lot of time, and so that's something that we're working on with them, is bringing all of that information from their 9 separate nav databases into a single database for reporting, for example. So, but yeah, that's a great question. I'll reach out to you separately after the webinar today, and just see if you have any follow-up questions that you'd like to discuss on that. Any other questions that you saw come in, Amber, or should we give everybody a few minutes back in their day?
There was one about approvals that were generally how they work, but I mean, I think high level, I would say they're configurable if you're talking about something like a purchase order. Depending on the ERP, I know the ERP I work in, you can choose to only look at purchase orders over $5,000 or whatever. There's different ways to configure that, so it's not an all or nothing kind of thing. You can, we want to make sure that you don't put yourself in a control situation where we pretend everything matters, which in the end ends up meaning nothing matters. So you have the ability to filter down kind of to the ones that are most important in terms of limiting financial risk. So you do have some flexibility there. And then in terms of moving to the cloud-based ERP, I saw another one in there. Generally, what we like to do is we like to start with an assessment that evaluates your business processes, your current system. If we did initially implement you, we like to double check and make sure that nothing's changed, or take stock of everything that has changed since your implementation. And that assessment is really the tool we use to make sure that transition is as less disruptive, the least disruptive possible transition. And I don't see anything else out there, Brian, but the question box is really small on my end. So in the event we missed anything, we do get a list to follow up on.
Perfect. Sounds good. Well, thanks again, Amber, and thank you everybody for joining the call today.